Every year, the final cutoff for your UK self-assessment is January 31st. Miss it by even a minute, and you are hit with an automatic £100 fine. But that fine is a fraction of what people actually lose. High earners often rush through these pages to beat the clock, frequently leaving thousands of pounds in unclaimed pension tax relief with HMRC. Before you begin, you need 3 pieces of information: your government gateway login, your P60 from your employer, and your personal pension annual statement. Navigating this form with precision allows you to move from a potential tax liability to a confirmed refund. First, log into the HMRC Government Gateway portal and initiate a new self-assessment tax return. You will start in the Tailor Your Return section. HMRC only generates the specific forms you explicitly ask for, so you must tell the system which sections apply to you. Scroll to the Tax Reliefs category. Find the question asking if you made contributions towards a personal pension and select Yes. Now you need to establish your baseline income. Copy your salary and tax data from your employment P60 into the corresponding fields in the digital return. Be careful here. You must use the gross pay figure, not your net take-home pay. Entering your net salary will result in an incorrect calculation. With your baseline data locked in, you have the foundation required to claim your tax reliefs. When you contribute to a personal pension, your provider automatically claims the basic 20% tax relief and adds it to your pot. However, if your income exceeds £100,000, you face a 60% effective marginal tax rate. This happens because your personal allowance is reduced by £1 for every £2 you earn over that threshold. Reclaiming higher and additional rate pension relief is the standard method for bringing your adjusted net income back down and restoring that allowance. This requires avoiding a common error. You must not enter the specific amount you transferred from your bank account onto the HMRC form. HMRC requires the grossed-up amount. This means you combine your out-of-pocket payment with the 20%. Those schemes are handled by your employer before you are taxed and do not require this manual claim. Populating this specific field with the correct value ensures you receive the full tax refund you have earned. Before submitting, go to the View Your Calculation page to verify that the relief has been applied. Check for a line item that says your basic rate limit has been increased by your pension contribution. This confirms the relief has been processed and your tax bands have been adjusted. Download a PDF of this calculation for your financial records. Tick the legal declaration and hit Submit. Remember that any tax you still owe must be paid in full by the January 31st deadline. You have now completed your filing and verified that you aren't paying more tax than the law requires. You have successfully navigated the current self-assessment process and maximized your tax efficiency. However, for many taxpayers, the once-a-year filing system is changing. Starting in April 2026, the Making Tax Digital mandate begins. Individuals with self-employment or property income over £50,000 will be required to provide quarterly updates to HMRC. You should consider adopting MTD-compatible software now. Moving away from manual spreadsheets early will make the transition to quarterly reporting much easier when the rules change. While mastering the current self-assessment preserves your income today, preparing for Making Tax Digital ensures you remain compliant as HMRC transitions to